and it's basically what I call my defining moment in life. It happened at a very, very early age. My family immigrated to America when I was 12 years old, and we came to Detroit. And it was about a year later, you know, my dad was working so hard, so diligently, he was working 12-hour days, you know, and I wanted to earn a little money myself. So I started a, paper route for the Detroit Free Press. And every morning at 6 in the morning, I would get my little red wagon, and I'd pull it along with all the newspapers, you know, and, at age 13, I managed to save up like $600 in 1973. I mean, at that time, $600 was a real money. You know, now $600 doesn't buy much. But anyway, at that point in time, my dad, who used to enjoy going to the racetrack just for enjoyment purposes with friends in Russia, you know, and he decided to take me to the racetrack with him. You know, and we went. The first couple of times were totally uneventful. I don't remember what the outcome was. But the third time we went, you know, I would take a small piece of his $2 wage, or maybe 25 cents. You know, so it was the third time, and after 9 races, my share of the winnings was $6. And it was the 10th race, and my father, you know, said, you know what, let's bet a trifecta, which is picking the first 3 horses in order. And he picked out 2 of the favorites and some horse in the middle. And I turned to my dad, and I go, listen, Dad, I don't understand you. I mean, even if you win this trifecta, it's going to pay nothing. I mean, what's the point? Where's the payoff here? Instead, I really like these 3 horses right here. And my dad looked, you know, one's like 60 to 1, one's like 40 to 1, the third one's like 15 to 1. What, you just want to throw away our money? And he says, 3 nags. I mean, Jesus, they're not even going to finish the race. I go, listen, Dad, you bet what you want. Here's my $6, and I'll bet what I want. Okay, so here it is. As it happens, the race starts, and right off the get-go, as they come out of the gate, there's a giant collision. Okay? And my 2 horses, my 2 launches are way on the outside. They don't take part, they're not in the collision. The 2 favorites immediately die, and they don't even finish the race. My 2 favorites get out in front by like, I don't know, 50 lengths, if not more. There's not a chance in how any horse is catching them. So as they're coming into the final turn, into the stretch, there are 4 horses basically fighting for 3rd place, and my horse is on the inside. And I could not possibly tell who won, you know, who finished 3rd. Anyway, it took photo finish, you know, maybe 5 minutes at that time, and after they finally flashed it, my horse came in 3rd, you know, by about this much, maybe 1/8 of an inch. And now my dad, I can't believe it, I'm ecstatic. I have no idea how much it pays yet, because at that point in time it took a while to calculate, you know. Anyway, about 5 minutes later, finally they flash it, and I ended up winning this trifecta. $4,800 I won. You know, our family didn't have $4,800 to our name at that point in time. You know, my dad is ecstatic beyond belief. I never see my dad happier before that and happier since. Anyway, we get into the car, and, you know, we're just sky high, and I mean, we're high-fiving to death, you know. Anyway, and I said something that was just, to this day, I still remember word for word. My dad didn't really get the meaning of it, but to me, it meant everything. And I said to him, I turned to him, I said, you know what, Dad? You know, there's got to be an easier way to make a living than working. You know, and those words stuck to me forever. And from that day on, I have never had a hard day's work in my life. And that's been my mission in life. You know, after that, we went maybe 2 more times to the racetrack, and that was it. And then the next thing that occurred to me was at age 17. You know, a song came out by Kenny Rogers called The Gambler. I'm sure some of you have heard of it. It was about gambling, what to do, what not to do. But one of the lines in that song that really struck out to me, that stands out, and has been basically a mission of mine ever since in life. And that line is very simple. If you're gonna, if you're gonna do something, make sure you do it right. You know. So whatever I've taken on since that point is always I put full effort into it, full dedication, and I would not settle until I became the best me that I could become at whatever that was. Then, about a year later, I started my college years, and the very first day of college, our English teacher asked all the kids in the class to stand up and introduce ourselves. And very briefly, just a few words, explain what our aspirations in life were. It was kind of, shocking, like, what the hell? I really never really thought about it too much. But anyway, they called up person after person. I want to be an engineer, I want to be an accountant, I want to be this, okay. But then they called me up, and I came up there, and I go, you know what? I'm going to become a professional gambler, and in case I fail, I'm going to get my accounting degree. And the look on everybody's face in the room at that point in time was priceless. But I meant every word of it. At that point in time, of course, I really didn't know what professional gambling was. I didn't really think about it too much. It was just a vision. It was a dream that I had someplace deep inside my head. And anyway, nothing really happened with that until I finished college. And then I got into professional gambling. And at that point in time, I didn't quite fully yet understand what professional gambling really was. For example, when you gamble in a casino, that's not professional gambling. That's just donating. Yeah, but you can't beat the casino. They got the odds in their favor. So in my opinion, professional gambling is significantly analytical, process of understanding risk versus reward and making wagers for profit in situations where you clearly have an advantage. Now, at that point in time, I didn't apply that to stock trading, but that's exactly what stock trading is. You try to find situations that are favorable, that make sense, where you have a very clear advantage, and you attack those situations. Anyway, through those years in my 20s, I went from backgammon, I went to poker, I went to gin rummy, I went to hearts, and every single time, it was the same thing from that Kenny Rogers song. If I was going to play the game, boy, I was going to play it right. And I took my time, and I took every effort I could to become the best I could become. I was rated in the top 10 of the world in backgammon. I won many tournaments. In poker, I managed to win the World Series poker places. I have many different other tournament wins. In hearts, I'm probably the second best player in the world. Anyway, fast forward that to 1998, and this is where my presentation really starts taking shape. At that point in time, I came to Vegas for one specific reason, to marry the love of my life, Victoria. And we got married here, but the day before that, I entered a World Series event, and I made it to the final table. So we had to move off our wedding the next day because the final table interfered. So we had to move the wedding up to the morning. We got married, and that late afternoon, I played at the final table. I ended up winning that event. And that was the first and the only time my wife has ever seen me play any games and gamble for anything. So she enjoyed that. That was unusual for her. So it was, and the very next day in the Vegas Journal, they had an article, Wed and Won. That was pretty cool. I enjoyed that. It was very nice. But anyway, that was the very interesting part about that is that was the beginning of the end for me with that type of gambling. I wanted to change, starting a new beginning with my new wife. I thought, instead of spending my nights and all my time and, coming home early in the morning after playing all night, whether it be poker or whatever other games, I needed to change of pace. I needed something different. And for quite a while, I thought about in the back of my mind about trading. And there were numerous times in my life where I had pursued that dream very partially. Back in my late teens, I did some commodities trading. And after that, in my 20s and early 30s, I created occasional swing trade, very occasional. And then in 1996, I even took a Series 7, and got a Series 7. And I was kind of thinking about heading in that direction, and then that kind of, I just gave up on it for a while. But now, I said, you know what, really, this is the time. You know, that tournament that I won in Vegas, the World Series book, I paid 110 grand. I said, you know, what am I going to do with this money? You know, so I said, you know what, I'm going to come back, and I'm going to devote my time now. I'm going to make a change, and I'm going to try trading. But I'm not trying trading just for the hell of it. I want to become as good at trading as I have in all these other games. And I'm going to do whatever it takes to do that. So when I came back, before I traded a single stock, before I thought about trading a single stock, before I did any paper trading or whatever else, you know, I basically put myself through a boot camp, a 2-month boot camp. And my whole point was, I wanted to find a strategy. And I knew the importance of finding a strategy, you know, that was going to pay off, something that I could lean on, you know, no matter what. So over those 2 months, I studied, and I observed, and I tried to put charts on top of charts, and stocks on top of stocks, and see where the correlation was, where the trends were, what, you know, what made sense, what didn't make sense. One of the things from my poker years was the power of observation that I built. And to this very day, is something that I use every single day. And the power of observation, as an example, when you're playing gin rummy for serious money, you know, you make mathematical decisions. But the key is also, for example, if you look at your opponent, the way he's putting new cards into his hand, depending on where they go, give you a clear meaning, possibly, whether he has 1 run or 2 runs or 3 runs in his hand. It gives you that extra advantage. And that's what I'm talking about, power observation. On a poker table, you know, I could endlessly talk somebody to death. But at the same time, I was watching every single player very closely, their mannerisms, what they did with their hands when they were in the hand, whether they went to their face, whether they didn't go to their face, how they put the chips into the pot, whether it was, you know, splashing or neatly put them in. And depending on the player, players have tendencies. And those tendencies can give you a very significant advantage when it's time to make a critical decision on a hand. And it's the same thing in stock trading. So for those 2 months, I observed and observed and observed and observed. And to this very day, not a single day goes by, even on boring days. You know, I generally get involved in the morning, and I trade a lot in the morning, and afternoons for me are slow. But I never leave. You can ask my wife, the last time that I went out to lunch or anything else for that matter, I mean, I can't remember, I'm sure she can't remember. Those times of the day, I sit there and I make myself watch and watch and watch. And I do research during that time, prepare for the next day. I try to spot trends. I try to spot a lot of things that could possibly come in handy in days to come. I put stocks on potential watch lists for coming days. You know, it's that power of observation. So there were numerous things that I found very interesting during that 2-month period. So let me just go over those. Just give me 1 quick second. Okay, anyway, the bottom line is, I looked at it, that 2-month period, as basically, you know, competing in a NASCAR stock race. Before those guys get on the track, let's say for the Indy 500, they do a lot of prep work. They check the engine, they make sure everything works fine. You know, the mechanics are there, the driver checks out the track, numerous test drives. Anyway, so before I started trading, I knew there would be no middle ground with my personality. You know, I'm not the type of person that starts something slow. You know, but I don't start it until I'm ready. And that's what this one was all about. I wanted to make sure I was ready. And when it was time for me to go, it was full speed ahead. You know, so it had to be basically the way I thought of it. I had to find something, a strategy that fit my personality. I was highly aggressive. Trading is something, my gambling is something that really prepared me a great deal for trading. And what I mean by that, it basically made a stone out of me. It had so many swings financially in my 20s and 30s from professional gambling, that I became immune to any swings. It didn't matter to me. Even 3 different times, twice in my 20s and once in my early 30s, I was dead broke. I didn't care. It didn't matter to me. I had skills. I just called my friend and would just say, yeah, whatever you need. You need 20 grand, here you go. So it was just another day. So I would move on and continue. But anyway, I was very aggressive. So I needed to find a strategy that was going to be aggressive, where I could be aggressive. Okay? And also, because of my professional gambling years, I needed to find something that was offering me instant reward. Because I was used to instant reward that day. I wouldn't, if I'm playing poker the whole night, I know by the end of the night how much I won or how much I lost. And I thought that there's various different types of trading. Swing trading, investing, intraday trading, all kinds of things. But I thought that intraday trading was something that offered me instant reward. Something that fit my personality. I've always feel that traders need to understand their personality and find something, find a specific niche that's going to fit that personality perfectly like a glove. And intraday trading did that for me. So that was that. Then the next step was, what type of stocks would I trade? Large cap, small cap, and I thought about it for a while, and I said, at that point in time, I didn't know any stocks. I knew the Dow 30, I knew, some tech stocks, whatever, I heard of them. So I thought, but everybody knows those stocks. What the hell am I going to find out about these stocks that the rest of the world doesn't know? Where's my edge? And from my gambling years, I knew that if I'm going to play, I need an edge, a crystal clear edge. So I said, small cap sector seems to be the place to go. Very few analysts cover that sector. And that's where analysis comes in the most, and is the most useful. So I said, okay, I guess that's the story. I guess we're going to head in that sector. And then, as I said, I was that 2-month period, I kept looking and studying every single day, endlessly, just hour after hour after hour. It seemed like it would never end, that 2-month period. And about maybe 2 weeks into it, I had a vision. Something very strange I noticed. I noticed a pattern. Let me show you guys what that pattern is. I used to have a ball that I used to squeeze all the time. Some people squeeze for stress relief. I just had nothing better to do. I didn't care. But anyway, I noticed a chart pattern that kind of blew my mind. And when I finally realized that there was something really special here, I said, wow, I think I'm onto something. So here's the pattern. All right? Okay? Inertia, momentum, out of the blue, for no reason, will take a stock up like that. All right? Now what happens is, it will reach that point where that momentum reverses, and gravity takes hold, and stock will fall. Another thing is, if that initial acceleration was just that high, the fall will be not as fast, because it doesn't have that acceleration yet, that gravity effect yet. But the higher it goes, the faster it falls. All right? Now, I said, that's interesting. And at that point in time, it was, 1998 was a crazy time. Unlike now, you had stocks going insane distances in a very short period of time. You had stocks that would go from 1 to 20, 30, 40 the same day. I mean, a company would announce, you know, they're forming a web presence by opening, you know, whatever, .com, and the stock would quadruple in 1 hour. And that was nothing. I mean, it would continue on the rest of the day. You know, and I looked at that and I said, Jesus, man, what the hell are these people buying? How can you be buying this when it's meaningless? And I just didn't understand it. So I said, you know what? What's the story here? So I noticed a pattern when news would come out, the stock would pop. Then, the next day, the stock would pop. Then the third day, the stock would pop. And that third day, a very interesting very interesting thing occurred. Is that it would come off its intraday high, and it would fall back to roughly the halfway point of in this intraday range, and then it would consolidate there for the next hour or two. And it would sit there, and what I later started calling it a spin action. It kept spinning and spinning and spinning and spinning, and it was very clear the momentum had reached its peak, just like the ball reached its peak. And once that consolidation broke, even the slightest break, it seemed like it was crystal clear that it was time to short. That stock had a long ways to drop, especially if it had a long ways to rise initially. So I said, wow, that's pretty cool. And I kept looking for that over the next month and a half, over and over and over again. And every time that pattern showed up, it played out to a T. And I said, you know, that's very interesting. Okay, well now I got something here. Now I got a pattern to play. Now, how do I find these stocks? And I decided to instead have them come to me. Instead of researching thousands of stocks and trying to find the ones that I'm going to trade, let the stocks come to me. Let them come knocking on my door. So every morning, while during those 2 months, I would wake up and I would go to the pre-market percentage gainers. I looked to see what was going on. And once I saw how much percentage, they were up and up, I said, okay, well, let me check out the reason why these stocks are moving higher today. Let me read the news. Let me decipher the news. Let me fully understand the news. Does the news make sense? And in many cases, these small cap stocks have no rhyme or reason for going up except lunatics buying them. I said, okay, well, that's also interesting. So now, I found a way to find these stocks. I found a way to trade them. Now, now I needed to do a little bit more prep work, and make certain adjustments to make sure I have criteria of how to do it, when to do it, some very specific things. So I did more and more prep work. And then, in July of 1998, I started trading. And I would only trade this one specific pattern, and nothing else initially. I thought I found gold. Okay? And I continued trading this nonstop that whole year. And if it wasn't there, I wouldn't trade. But almost every day, there were 2, 3, 4, 5 of these type of stocks. Because at that time, you had lunacy in the market. Endless lunacy. Every single day, there was insanity in these type of stocks. So there was no shortage of stocks. And over that 6-month period of 1998 that I started trading, that pattern played out to a T to be profitable, I would say probably 90 to 92% of the time. Now, at that point in time, I wasn't shorting on the way up. I would always wait for momentum to stop, consolidate, spin, and start to break, and then I would attack. The reason why I wouldn't attack on the way up, because stocks were so insane at that time that she just didn't know for sure when momentum would stop, when rationality would return. I mean, I remember one day on Thanksgiving Day, in fact, Craig over here, that's how I met my friend Craig, we were trading the same stock. That stock on one day, on Thanksgiving, in half a day, went from, I believe, from 12 to 56, and settled the day at 35. I mean, that's the kind of stuff you were dealing with, and the news was absurd. Made no sense. Now, that day, I didn't short the stock until well after it broke off its highs, and I did very well in it. But the point is, I found a pattern, I stuck to it. And I found immediate success, you know, in 1998. It was a good year, a good 6 months to a year. And I found a niche that to this day, I trade every single day, although I have adjusted it significantly from year to year. And I'll explain that in a few minutes. Now, having a niche is very crucial. Everybody should have a strategy that they fall back on. But just because you have a niche doesn't mean that's your playbook. You always need to keep improving. Keep moving your game to a new level. So my thing was, specifically in 1998, I said, okay, I got this thing, I think, fairly reasonably down pat. I'm not an expert in it, but it sure looks like it's working great. But I'm not satisfied. So let me add some things to my playbook. So I started different patterns that I found interesting, mildly interesting. And those I would trade in small size. When I say small size, maybe a 10th or 20th size of what I normally traded, just to give me experience, just to see if they work, just to see if afterwards I would analyze to see how they work, whether there was an advantage here, what I did wrong, what I could have done better. And year after year, I try the same thing ever since. Every year, I try something different. I incorporate another piece to my playbook. Because you never know. Markets change, situations change. All of a sudden, small caps are in favor, large caps are in favor. I can turn to those, or I can turn to the long side for a while, or whatever may be the case. So you've always got to keep adding to your playbook. You should never, ever, ever be satisfied. Now, just give me a moment, because I got to see where I stand here, so I don't forget to say anything important here. Anyway, the thing was, it's important to understand why stocks run. And one of the things from that boot camp, like I said, it was highly important for me to understand why stocks were moving. But not just why they were moving, why other people wanted them so much. I kept looking at so many stocks and they made no sense to me whatsoever why they were moving. But at the same time, I wanted to understand why other people were chasing them. And that's a totally different process. I have a finance and accounting background, so I'm able to decipher fundamentals. And that's where it all starts for me, is fundamentals. Before I trade any stock, I have a general understanding, in many cases a very good understanding, what the fundamentals are. But, that said, there's much more to the story of fundamentals. There are many traders out there, maybe 40% or 50%, especially day traders, who don't even look at the news. They don't look at the fundamental story. All they care about is the charts. And something Dan said earlier, he said he doesn't look at charts. And I think that kind of an approach is a little short-sighted. Because you need to build your playbook. You need to understand what the other guy's thinking, what the other guy's looking at. And Dan is a very strong trader. In fact, he's one of the 5 traders that I actually follow on Twitter. So I'm not saying anything negative against him. I'm just saying, there are things that you need to look at. If you're just looking at charts, you're looking at it all wrong. You need to look at everything. And then you need to paint a portrait. Everything together. And hopefully it will all come together and make sense to you. I hope that's kind of clear. Now, one thing that I found, I think that's important, and that's having a vision. anything in life. You know, business you start and you have vision and it's small. Whenever I started anything in my life, it was with a big, big vision. You know, I had a dream, and my dream was here. It was never down here. Okay? So, I see a lot of traders out there, you know, they trade in ways that preclude them from ever reaching huge success. And what I mean by that, for example, just to give you a few minor examples, I notice a lot of traders, especially traders that are involved in a lot of chat rooms. You know, they start falling into the pattern, especially new traders, of scalping intraday for 5-10 cents. This type of strategy is absurd to me. It's idiotic. I don't understand it. What do you hope to gain? How are you ever going to scale that up in future years? Makes no sense. Then I see traders that are focused because they have small account. They only focus, let's say, on $1 stocks, you know, or stocks below 2, and they keep only on the long side with these stocks. But what's the problem with this kind of theory? Most stocks that are $1 to $2 range or below, they're trash. They're garbage. You are buying garbage. Is this what you want to build your business on? Buying trash? How does that make sense? That small time vision, even if you can trade those things for 5, 10, 15 cents, who cares? Forget that thinking. That thinking is piper thinking. Okay? That's all it is, piper thinking. It's just that simple. You're going to trade, you got to have a vision. And your vision's got to be like this, not tunnel vision. Do not follow other people. Do not follow what they do. Do not follow what I do. You got to find your own way. You got to find a strategy that suits you. That is crucial. But the most important thing is, be you. But don't be just you. Become the best you can become. That comes with effort, dedication, power of observation. Now I'll tell you a funny story. Highly unusual story. It's a poker story. A story that will kind of, you know, probably the funniest story you will ever hear regarding poker. This happened to me in 1994. At that point in time, I was playing in this particular house game, and there was a player in this game who was just a nut job. I mean, you call it simply. And he was a constant loser, and I would beat up on him nonstop. I knew his habits inside and out much better than he knew himself. One day, the game, for whatever reason, broke up early, like at midnight. And this guy was the big loser in the game. And as we were walking out the door, he goes, you want to play heads up? I go, heads up, huh? Sure, why not? So we go to the table, and he pulled out a couple of decks of cards, and we started playing, and about 20 minutes go by, and you know, I'm saying to myself, this is odd, man. This guy has made some really unusual plays. I have never seen him make plays like this, totally unorthodox, totally outside of his character. Something doesn't smell right here. It doesn't pass the test, the smell test. So maybe a few more minutes go by, and I'm really paying very, very close attention. Like I said, the power of observation. And I'm looking, I'm trying to put the pieces together, trying to paint that portrait. And I noticed the cards had the slightest of markings on them. I said, oh, that's kind of odd. And the markings are kind of all over the place, but yet they seem to have some kind of a slight pattern to them. And over the next half an hour, we kept playing, and he keeps winning, which is somewhat unusual for this guy. You know, I'm starting to put the code together. And finally, after about half an hour, I figured out what the markings meant. And all the cards were marked. I said, okay, this is interesting. Well, I mean, I could stand up and leave. Or I could take advantage of the situation and really punish him. Okay? So now that I know what the cards are, you know, and he knows what the cards are. So when there's no dealer in this game, just he's dealing, and then we're alternately dealing. So when he's dealing, he knows exactly what my cards are, and I can see his cards as he's laying them down. He's not protecting them. But when I'm dealing, I'm protecting my cards, and then I know his cards. So over the next 12 hours, as we continue playing, he lost an astronomical amount of money. I punished him unlike I have punished anybody in my life. And what was amazing was we finally quit. We couldn't take it anymore. And we're walking out, and I'm behind him, you know, walking over here, and he's walking like this, and he's like this. He's shaking his head, and I'm walking behind him with a smile from ear to ear, and the only thing I can say to myself, you freaking idiot. Okay? You know, I can only imagine what you're thinking to yourself. You knew the cards and you still couldn't beat me. Anyway, the point of the story is once again the power of observation. Don't ever underestimate this. Whenever you're trading, don't just look at the numbers. Don't look at your P&L. Forget all about that. Look at patterns. Look at what the stock do. Look, there's so many other things to contemplate. Think about what your action should be if a stock does this, if a stock does that, but always come prepared. Always come prepared. All right? Now, going back to this Piper thinking, it's very important to just really put that behind you. Every single person in this room, as I look at all of you, some of you are very accomplished. Some of you are mildly accomplished traders. Some of you are wannabe traders. Some of you just started out, and some of you are struggling. But every single person in this room has one commonality. Every single one of you has the ability to make tens of millions of dollars in trading. Every one of you. The only thing that's stopping you is you. And your vision. Your dedication. You need to think big. Think outside the box. Okay? You can't, for example, does size matter? And this is something that I have believed from day one. It definitely does. Because I trade a handful of situations every day. But when I do, I bring it. One of the people on Twitter asked me several times, what is your risk, how much risk are you willing to take on this particular setup? You made 50 grand. And I never know how to answer such a question. And to me, it's such an absurd question. Because I look at risk totally different than most people do. I respect risk. I understand there's risk to every single trade. But the situations that I'm trading are not about risk. I'm not worried about that risk. I understand it's there, and if it goes against me, fine. But the biggest risk to me is the risk of not making enough on this particular setup to satisfy my huge appetite. So whenever I see a nice setup, a setup where I'm 90% sure, I'm not going to trade whatever size I generally trade. I'm going to trade 5 times, 10 times, 20 times, I don't know, 50 times my usual size. Every trade is different. Setups are different. I tend to rate those setups with a certain numbers from 1 to 10. Now once a setup rating reaches 8, 9, and every once in a great while at 10, listen, those are special opportunities. Those are opportunities to send it in. Not be afraid, not think about risk. Now risk is a very interesting thing. There's actually, in my view, one particular thing in risk management that stands out way, way above all the rest. And it's not stopping out. It's not about thinking where to stop out. It's not about how much risk you're taking on. It's something unusual, something probably most of you have never thought about. And that is the entry point. Your entry point, before you get into a trade, you prepare. But your entry point, that identifies your risk. For example, how many of you have gotten into a trade which later in the day turned out to be profitable? But yet, because you were early on the trade, you stopped yourself out.